Back in the stream right now. Sorry for that small delay. We had a bit of issues with the audio, but I hope everyone can hear me now and we are all good. Just let me get my screen back up real quick so we can have a look at the Bitcoin price. This is what happens on live YouTube, guys. Are we all good now? Is the sound all good? I think we are. So let's go through this Bitcoin price and kick off where I just left off. So we're at a pivotal moment right now. Obviously, when the price behaves like this, we typically see really big price movement in the Bitcoin price. Because what we've been doing is we've been ranging. We've been hovering in this 38K to 39K region. Usually when we coil up into a zone like this, we do get a massive explosion, either to the upward side or the downward side. And we usually get it in quite a big way. So right now, we do have to be on our toes and really assess this market as it comes, because there is potential for a big leg upwards or downwards. We just have to be really preemptive and try and measure ourselves in terms of how we position our portfolios right now. So my advice for this market at the moment would obviously be keep a little bit in stables. Don't be too rash with your purchasing, and make sure you keep an eye on the macro events that are unfolding. But there's a little bit of a bullish sign here. I don't want to be too bullish at the moment because obviously the market is still very unstable, but there is a lot of Bitcoin that has actually been taken off exchanges. So in the past 9 days, we've had more Bitcoin taken off exchanges in the history of this graph. So it's quite a stark contrast to what was happening before. We're seeing a lot of Bitcoin being taken off exchanges, potentially an indicator that the whales aren't scared. So this is also something to take note of. But we have the big FOMC meeting tomorrow, which is when the Fed will determine the severity of the rate hike. So obviously, we want the basis point increase to be no more than 0.25. That is 25 basis points. And that is the amount that the market is pricing in right now. So if we get anything less than that, that will be bullish for the market. And if we get anything more than that, that will be bearish for the market. But personally, I don't see the Fed as being too hawkish right now. We know we have a major inflation problem. The likelihood of a recession is quite high, either now or later. So they do have to make a decision. And it's kind of a catch-22, how severe to hike rates. You hike rates too severely and you risk going into a recession. You don't hike rates and inflation runs rampant, and then we risk a recession later. So it is very volatile times in the market right now. And obviously that is reflecting in the markets in terms of crypto. So we do have this meeting tomorrow, and I think that will be a big market mover, either upwards or downwards. So we do have to keep our eye on that as well. But funnily enough, the Bitcoin dominance is showing strength, but it's not showing too much strength to the point that it's giving me an indicator that the altcoins are super negative or anything. I mean, it's been ranging, just like the Bitcoin price. The dominance is ranging in this 43% region. This indicates to me that alts are holding up okay compared to Bitcoin, but we are seeing a little bit of a risk-off approach being taken in terms of the ecosystem tokens. So a lot of the ecosystem coins across crypto right now are struggling. So you've got the smaller caps struggling a lot more than the big caps, which aren't actually lagging too far behind Bitcoin yet. But we can see this when we look through CoinGecko. So the large caps are largely following Bitcoin's lead right now. We're not seeing too much crazy movement in the large caps yet, but we are seeing some of the lower caps really move quite volatile right now. So we do have to be careful. Obviously, this just means this isn't the time to be crazy in small caps. This is the time to have a very well-balanced portfolio of Bitcoin, large caps, and also make sure you're taking advantage of DeFi, which is pretty much the only way to make money in this market right now, guys. It's been a very choppy market, but DeFi is giving us a chance to be able to earn some passive income on the side. And we are seeing this reflect in DeFi Llama. Obviously, the overall protocol revenue at the time when I started this video, not protocol revenue, total value locked was up 1.55% over the past 24 hours. How come? Because DeFi is pretty much the only way that you can make money in this market right now. It's very hard to time the market in terms of trading, but what we're seeing across the DeFi market is it's giving us the opportunity to continue to earn income. So the total value locked is staying relatively positive compared to what it was in other times of volatility in the past. So when we did see that huge push down in Bitcoin towards the end of last year, TVL was dropping quite dramatically, but we have seen it really steady recently. So maybe an indicator that people still need to farm, as it's one of the only ways to make money in this market. But there is only one thing that I'm interested in right now in terms of this chart right here. And obviously it's at number 2. It's this Lunar TVL. So we have seen a plus 74% increase over the past month in the Luna TVL, it's indicating to me that this is the strongest ecosystem. And if we look at the prices right now, that is clear as day. The TVL on Luna is almost a quarter of the TVL of Ethereum now. So we are seeing Luna genuinely cement itself as a potential Ethereum competitor if we look at the total value locked in this market. So it's pretty crazy that in a sea of absolute red here, with Phantom down 34%, with some of these other chains down, Sol down 2%, Ethereum down 2%, Luna continues to grow and grow, which is a very positive sign, because Luna is showing some of the most strength in this entire market right now. And this is what happened when it came to the bet, because we have to talk about this bet. If Luna's going to be a big winner, obviously there's multiple sides to this story right now. So we did have one side of bulls, the major Luna bulls, coming out and showing their support for Luna and giving their price predictions yesterday. And we also saw the bears coming out, giving their price predictions for Luna and where we are potentially headed. So let's break down this $11 million bet that happened yesterday, recap what happened, and then look at the bull case and the bear case so we can make a decision as investors where we should be allocating our money and how we should be trading. It was really interesting stuff yesterday. So let's get straight into it. We saw this bet take place yesterday. It was an $11 million bet on the Luna price. So it basically started with some negative tweets about Luna from All God Trading. He's obviously not super bullish on Luna, which is clear now. And he said that he triggered 90% of crypto Twitter talking negatively about Luna. And he said, it feels like DeFi is just death. A bear market which will trigger new innovation might be a good thing. So clearly a big bear in terms of Luna right now. He said Luna is the big connect of this bull run, printing 20% APY out of their asses. Once APY drops and demand goes down, Luna will spiral into having to bail out billions of dollars in UST. Obviously, this caused a massive stir in the market. And he said he wanted to take $1 million bet on Luna being lower than the price a year from now. So honestly, when I saw this, and I saw it just before Kwon responded, I thought, well, he's not going to respond. Like, there's no way he responds to this. But he actually did. He said he wanted to make $1 million bet, and Do said, cool, I'm in. So now you've got $1 million on the line from both of these parties here. He said, would you prefer to ask? Do Kwon took a little bit of a shot at him. He said, would prefer to ask what your net worth is and bet 90%, but maybe this is what it is already. So a little bit of banter between these guys right now. And then they used Crypto Kobe as an intermediary. So he set up a wallet, obviously as a trusted source, and they both sent $1 million into this wallet. And that was very, very crazy. And obviously at that point, we were going, whoa, this is nuts. I mean, it's $1 million on Luna, like one of the most bullish protocols in crypto right now. Like, why is he doing this? But then we were even more shocked by this $10 million bet that GCR came through and did. He said he'd do the same bet for $10 million. And Do said, sure, fund Kobe's wallet and I will match. Good luck. I honestly didn't think he was going to match this. Like, I was thinking, wow, it's $10 million. No way he matches this. He's probably just doing it for likes or clicks. But then on Etherscan, just an hour later, we saw the $10 million was added to the wallet. Absolutely crazy scenes right now. So now there is $11 million for either side. In this wallet, you've got Do Kwon's 10 million, and you've also got this guy's 10 million as well, who is GCR. So they've both bet $10 million. But why are they doing this? That is the question we actually have to answer. Because although this entertainment is very funny and very entertaining to look at, we do have to break down exactly why they're doing this. What are the bullish catalysts for Luna? And then also, what are the bearish catalysts for Luna? Because we have to look at both sides when we're evaluating risk reward in terms of an investment. So the first thing we have to do is look at the bullish case. And the bullish case does start with Do Kwon, and this will dictate what the bullish case is for his bet and why he is so confident. So pretty much it all starts with the UST market cap. The UST dominance is basically exactly what is driving the Luna price right now. If you guys don't know, the way UST works is every time one new UST is minted, the equivalent amount of Luna is burnt. So we are relying on this UST adoption increasing for Luna to increase in price. So basically when you're betting on the price of Luna increasing, you're essentially betting on the rapid pace of UST adoption maintaining pace. So this is obviously where Do Kwon's stance does come from. We have to understand right now, though, that UST adoption is mainly being driven by Anchor Protocol. because Anchor Protocol is the main way for you to earn yield on your UST. So the UST balance is now $15.6 billion, or the TVL balance locked in the protocol. So that's deposits and collateral. So we're seeing mass amounts of liquidity flow into Anchor. And obviously this is increasing demand for minting UST, because whenever you put in a deposit as collateral into Anchor, you are using that deposit to mint UST in return. So the Anchor protocol is really the basis of what is happening in Luna right now. There are many applications of UST that are coming to Luna in the future, but we have to understand that UST adoption is still very reliant on Anchor protocol. There's been a lot of talk about the yield reserve, and I do want to address the sustainability here, because the sustainability of the yield reserve will go a long way to dictating who wins this bet. So the yield reserve right now is sitting at 432 million UST. As it stands, this yield reserve will deplete in around 2 to 3 months. So at this current rate, given the sheer balance of deposits versus collateral or borrows, we have to accept that this yield reserve is draining to zero over the next few months. Now, this might scare a lot of people, but Terraform Labs obviously have been backing this yield reserve, and they will continue to back this yield reserve as they buy time to make Anchor more sustainable. We did see that they topped up a few weeks ago, $450 million into the reserve to 500 million, and the reserve has drained down to 432. But this is why they're happy to keep depositing into the yield reserve to buy themselves time. Firstly, they are adding more collateral options to Anchor. So we did see the proposal here from AVAX to be added to Anchor Protocol. And this is another way that they are able to incentivize borrowing. So by topping up the yield reserve, they're incentivizing new forms of collateral to be taken out. So there's more people coming in and borrowing. The more borrows, the more profitable Anchor Protocol becomes. So having AVAX as a form of collateral is also very big news, and that proposal is happening right now. We're also potentially going to see the exact same thing happening for Bitcoin, other coins like Solana. I have no doubt that there will be multiple integrations in terms of collateral, but Anchor is taking a measured approach here in terms of adding new options. Remember, as crypto grows, the value of this yield reserve will keep growing. So Anchor becomes self-sufficient when the market goes up. Remember back a few months ago when the market was super bullish, Anchor Protocol was performing really well. And in fact, at one point, the borrows even almost outweighed the amount of deposits. Right now, with the market going down and asset prices decreasing, there's more demand for farming stablecoins, and the value of the collateral assets like Ethereum have decreased. So this has meant that Anchor has become less sustainable. But if we look at the crypto market from a 2 to 3 year point of view, we obviously have conviction that the market will be significantly higher than it is today in a few years. Then Anchor at that point will become very sustainable. So by topping up the yield reserve, it's basically buying time for one, Anchor to implement these changes to make it more sustainable, and two, so the market can pick up and make Anchor more sustainable in and of itself. Worst case scenario, in my opinion, they can always drop the the yield rate in terms of how much you're earning on UST, maybe from 20% back to 10%. So the current state of Anchor right now really reflects the market conditions. It's not something I would be worried about. I do have conviction that Anchor Protocol can become sustainable. That is my personal opinion. However, we are looking at the bull case right now. So when we look at the bull case, the Anchor sustainability is one of the major reasons and one of the major drivers behind Luna. Because as UST adoption is increasing, Anchor is the main way that this is occurring. And that's just the reality of Luna right now. We are very correlated to Anchor. But there is also some other news developing over the past few days, and that's why I thought it was really essential to make this stream. It's actually to do with the Bitcoin Treasury that the Luna Foundation Guard is implementing. So if you guys don't know, the Luna Foundation Guard is like a backstop for Luna. So it's an organization dedicated to supporting the Terra ecosystem. So they will come in times of volatility and create this reserve so that they can get the UST back to peg if necessary. So by creating this Bitcoin reserve, they're creating this essentially this insurance fund for Luna. So it's very important and it's big news because it is making the sustainability of the UST peg increase. And I'll explain why that is happening right now and what it means for the Terra ecosystem. So, what they've been doing is they've been building up their Bitcoin reserves. So, the LFG closed a $1 billion private token sale. So, what they did a few weeks ago is that they sold some of their Luna for UST, and they were able to buy Bitcoin. So, they minted UST and they bought Bitcoin with the amount that they minted to start developing this Bitcoin reserve. It was the biggest private token sale at the time of $1 billion, and it was led by Jump Crypto and Three Arrows Capital. So, it was one of the big investments into the Bitcoin ecosystem. And what they're doing is they're building a nice backstop. We also saw TFL donated. So TFL is Terraform Labs. Terraform Labs and LFG are separate. They donated 12 million additional Luna to LFG. So on top of the private sale that LFG orchestrated, Terraform Labs also put in another 1.2 billion to topping up the UST reserves. So it's a very important thing because they are building a backstop to decrease the risk of UST depegging. So just picture this scenario. If someone conducts a massive short on UST and wants to tank the UST price, or there's a lot of FUD surrounding UST and a lot of people are panicking out of UST and the price declines, what these guys are actually doing is they are stepping in and they are now coming up with a Bitcoin treasury reserve. So if the price of UST depegs in the case of mass shorts or mass exit liquidity, they can come in and they can back this up with their Bitcoin reserves. Obviously, this is reliant on the Bitcoin price, but having this backstop is massive news because it gives us a sense of security that UST will maintain peg. And as long as UST maintains peg, and this obviously helps it increase in adoption, that means that it is positive for the Luna price. So that is why Kwon is so confident with this bet that he's conducting. It's because this is massive news for Luna. Having this massive Bitcoin backing helps Luna become more sustainable, which is massive news, obviously. He also said UST with $10 billion in reserves will open up a new monetary era of the Bitcoin standard. Personally, I don't necessarily think that it will ever come to a point where they will need to use all this Bitcoin. The UST peg mechanism is very smart. UST and Luna have some of the most interesting tokenomics in crypto. So having the UST peg, having that smart mechanism behind it means this will probably never be necessary. But in the case that it is, at least we have this Bitcoin backing. But what this does is it actually gives the Luna price itself underlying backing, because the more Bitcoin they can accrue, when you're purchasing Luna, you're actually in an inherent way getting exposure to Bitcoin as well. Hence why Kwon said it is the new era of monetary standard. I think it's very important to have Bitcoin backing not just Luna, but other major treasuries as well. Kwon also said if there's any confusion left at this point, we will keep growing the reserves until it becomes mathematically impossible for idiots to claim depeg risk for UST. So this is just what I was saying. This is why Kwon is so bullish on this bet, because he knows that the risk of depegging for UST is quite low, and he also knows that there are major catalysts with Luna coming in the future, with UST adoption rapidly increasing. There is one last catalyst I want to touch on before discussing the bear case in a minute, and that catalyst is credit cards. Astral is starting a credit card for you to be able to spend your UST. I think this is very important because we need real life use cases for UST. Similar to what we saw in Korea with Chai Payments, Astral Money is now coming out with their own card. So this will allow you to spend UST using a credit card. And I think this is very cool because as adoption increases, people need ways to be able to spend it. I think this is only launching in Europe so far, but you can go onto the Astral Money website and check out this card. I'm sure cards like this will be rolling out worldwide soon. So credit cards are just more ways to increase UST adoption. Anchor is a great way of increasing UST adoption, but we do need other alternatives as well to make sure that UST can fully cement itself as one of the top stablecoins like it is already. But let's look at the bear case now. We've talked a lot about the bull case. We know Kwon has a very, very strong case here for why he may win this $11 million bet. But now let's look at some of the negatives, potentially why this bet was taken out, and some of the negatives that could impact the Luna price. So Sensei Olgod did a thread on this. He said, multiple people have seen me calling UST and Luna a Ponzi. Going to briefly explain why. Just before I read this thread, it is very important to look at the bear case. This doesn't mean I agree, but we have to be transparent and honest in crypto. We can't always look at the bullish narratives for projects. We do also have to look at the negatives. That is the only way we can come up with justifiable risk-reward scenarios in order to size our positions adequately. So we have to pay attention to the bear case as well. It's very important to get a holistic view of what's happening with the project. So he says UST maintains stability through a simple swap mechanism. Obviously, one Luna can be exchanged for $1 worth of UST for $1 worth of Luna at any time. If UST becomes less valuable than $1, buyers can scoop it up and use it up as kind of like an arbitrage. They can buy it and sell it for $1 and they can make profit on it. As buyers do this, demand for UST causes the price to go up until it reaches 1 USD. Okay, no worries there. But basically, 11.7 billion UST is backed by Luna order books. In best case, it can maybe sustain a $1.2 billion sell right now. For now, they've driven up demand with 20% fixed APY printed out of thin air. So basically, to translate, what All God is saying is that the best case is that they could sustain $1 to $2 billion sell right now, which means that if there is a run, a mass amount of shorts on the UST price, or a lot of people exiting UST due to some potential FUD that comes out, or market volatility, which causes the price to depeg, then he doesn't see this as sustainable. He sees that UST could potentially lose peg, and he thinks the 20% APY is ludicrous. I did go through the Anchor protocol sustainability before. I showed you the game plan there, but what he's saying is that he doesn't buy it essentially, and he thinks that the 20% APY is unsustainable. And this is the major negative with Luna. I did go into before why I think Anchor can be sustainable, but if I'm looking at it from the bear perspective, there is potential that Anchor protocol cannot fix its issues. And since Luna is very reliant on Anchor, if something did happen to Anchor or happen to the UST mechanism in Anchor, then obviously there could be some downwards price movement from Luna, because Luna is a bet on UST. So if UST fails, like Sensei Allgod thinks it will, because he thinks that Anchor APR is unsustainable, then obviously he is in a good position to win this bet. I personally don't believe this, but we do have to also go through this case as well, because it's very important to look through multiple perspectives here. He says that lunatics are expecting demand will infinitely increase for UST. This is also an assumption that a lot of us do make. Obviously, I'm a lunatic as well, but that is also true. When I was doing my Luna price models in terms of my price prediction a couple of weeks ago, this was taking into account the assumption that UST would keep increasing linearly, or at least if it curves off, it would keep increasing to the extent that it can maintain in an inflationary policy, essentially, of UST continuing to be minted. He's saying that he thinks that this isn't possible. It's a little bit of a Ponzi, because we can't expect UST to keep being minted, and he thinks there'll be a slowdown in this price. So he goes through the whole thread, and check it out if you're interested. But that is pretty much his point of view. He thinks Anchor's unsustainable. UST is too reliant on Anchor, and also that the UST price growth is also unsustainable. I think they're valid points. I don't think that he is making any rash points, but I think he is missing a few key details. So I'll give my perspective here on who I think is going to win this bet out of the two sides. I have to side with Do Kwon here, because I think the positives severely outweigh the negatives. I think that if Anchor can become more sustainable, as they have a roadmap to do, that goes a long way to increasing UST adoption. We're seeing many catalysts across UST, like the credit cards. We're seeing many other catalysts coming out of, obviously, Korea with Chai payments, but also real-world adoption and use cases for UST. The decentralized narratives for the UST stablecoin are very large as well. Obviously, with regulation potentially threatening regulated stablecoins like USDT, UST being a decentralized option plays well into that narrative. So there is too much going for it, in my opinion. In crypto, we do have to look at bets as risk reward. There is a risk with this. I just stated the risks, that we are too reliant on Anchor and that UST could depeg. But we also have so many catalysts, and those catalysts outweigh the negatives. So if I have to make a percentage guess on who would win, it would be Do Kwon in a year's time. I think he'll come out ahead. Obviously, that means the Luna price will be above $88, which is the bet amount. So that is my opinion. But remember to take profits if you need to. If you got a very good entry on Luna, I wouldn't suggest aping now, just because Luna will be higher in a year's time, or at least that's what we think. That doesn't mean, that isn't an excuse to necessarily ape. We have to be careful in this market. As I discussed earlier, the Bitcoin price is volatile, and as strong as Luna has been against this market right now, things can turn at any moment. So make sure you are taking a small amount of profits into stablecoins so you have buying power to buy those dips. That's also a very important strategy. I am going to be going live on my Instagram now to answer questions. So if you have any questions, head over to my Instagram. First link in the description. and I'll be doing a live stream. So go over there, check that out, and come and ask any questions, and we'll hang out for a few minutes, and I can just have a chat to you guys, because I think that'll be a lot of fun. So I'll see you over on my Instagram, and I'll see you in tomorrow's show at the same time. Peace out.